End of the 30-year fixed mortgage. One of my friends in the mortgage industry used to say, Amol, the interest rates will never go over 4%. We cannot afford an interest rate of over 4%. Unfortunately, that lender has retired and I cannot go and talk to him. But we are already in the age of 7-year ARMs going at 7%, and we are not seeing that this is the peak or the top. So what exactly is a 30-year fixed? When did it come into being? And how does it help? So the 30-year fixed mortgage was created during the Great Depression in 1934. At that time, the 30-year fixed was introduced so that homebuyers could buy their property with that 30-year fixed mortgage rate and plan their payoff on the property over 30 long years. Now, given that situation, they were able to plan and buy and live in their home. And that is what got the American dream going. Now fast forward today. What exactly has happened? We are seeing the Moody's downgrade. We are seeing the treasuries shake just like stock market. We are seeing the interest rates being sky high. With everything that's going on, we are not going to see those ultra low interest rates that we got during COVID back anytime soon. So, at this point in time, it's becoming even more difficult to borrow on a 30-year fixed. In fact, one of my clients, at the time that I was helping him buy, he was getting a 2.25 30-year fixed interest rate back in 2019, I would say. And he said, no, the 7-year ARM is cheaper, so I'm going to go for the 1.75%. Of course, 1.75 and 2.25, if you look on a percentage basis, that almost looks like a 20% price difference between those two interest rates. And so that was the difference. And so he opted to go for the 1.75 7-year ARM. There are several of these stories. I was staunch and I was recommending the 30-year fixed all the time in those days. And I've helped several people leverage that money during those times. Now what has happened is that the interest rate is no more available. So what's the effect on the market? A lot of those people that have bought their homes at the below 3% 30-year fixed cannot find anything cheap to buy even if they wanted to move out. So that is where you are seeing this market getting a little bit stuck. So you're now not seeing a lot of inventory come up on the market because they could not sell their home, because they could not afford to buy their next property. Now, with the ultra high interest rates, people are now opting for the ARMs. And not just that. Just look at the news from 3 days back. Today, I'm talking on the 27th of May. On 25th May, it was being announced that the Fannie Mae and Freddie Mac will be going public. So, remember, whenever a company goes public, they are going to say, oh, we are here for the stakeholder interest. And who is the stakeholder? The shareholders' interest. What do the shareholders want? Profits. So do you think they are going to sacrifice their profits in order to let the home buyers get a 30-year fixed rate on a long term? Think again. So how do you plan how to approach this end of the 30-year fixed. Simple. Just get a 30-year fixed loan. I know it's high. I know you cannot afford it. But if you cannot afford it today, think, if the interest rate continues to keep going up in 7 years' time, do you think you will be able to afford that, or will you be squeezed out of your house in those 7 years' time? So think seriously about this. Additionally, or alternately, you should be able to generate as much fixed income against the debt you are taking today, so that you should be able to pay your mortgage out of the income that you are going to get. So there are a lot of structural strategies that we can work with. You can bounce your ideas or just schedule a call with me and we can figure things out. I hope you're getting the dilemma and you're getting how we are having to deal with this issue. Thanks for watching. See you on my next one. Bye.